back with another video. In this video, as you can see over here with my structure, this is a line graph, it's a line chart. Of course, we will be going into the actual charts and also looking at the same thing. I've been promising the video of support and resistance for a long time now, all right? And I haven't been able to upload it because for the past few days I've been pretty sick and I've been busy with school, blah, blah, blah. There's a bunch of things happening in my life, so I haven't had time to really honestly upload all the videos that I wanted to upload. So I have a bunch of videos scheduled for the coming weeks, and do subscribe and hit the bell icon just to get notified if I upload my new videos, and I will be uploading my new videos very shortly. I have a bunch of videos that I want to upload. So we are going to be analyzing chart patterns today. That's going to be the basis of this video, nothing else, just chart patterns, identifying support and resistance, identifying major key levels, identifying double tops, and basically the stuff that I personally trade with. And I'm going to be revealing all my secrets in this trade about my ways of chart patterns and how I like to trade chart patterns. Okay, so to start with, you guys can see this setup right here, and I just did this about like around 5 minutes ago just for the video sake, just to explain to you guys in a simpler way before we get into the actual charts and to actually explain this to you guys. So as we can see, first let's start from the leftmost side. We can see the price is starting from here and it goes up and makes a high, right? And then, so let me just use this. So price starts from right here, goes up, makes a high, comes back down, makes a higher, comes back down, makes a higher high, comes back down, makes a lower high, comes back down, makes a high, and so on and so forth. And then again, we're back in the resistance zone. So let's imagine a ceiling, all right? So let's say this is a ceiling, okay? Okay, so let's say this is a ceiling, and okay, so let's say this is the ceiling and this is the floor, right? This is the floor, okay? Ceiling and floor, right? Now I throw a ball from right here. So I'm standing, this is me, right? I'm standing right here. I'm just kind of struggling to make this drawing. Excuse my terrible drawing skills. Anyway, so this is my face. Yes, I know I look like a robot. This is me, right? This is me, and I throw a ball. I throw a ball from here to the floor. I throw the ball from here to the floor. The ball bounces from the floor, goes to the ceiling, right? And the ball bounces from the ceiling and goes to the floor. And so on and so forth. So depending on the speed that I throw the ball at, it might bounce off here, 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 and just stop bouncing, right? So this is what basically resistance and support mean. This is support, this is resistance, okay? This is what it means. So imagine this is a person right here, there's a person, there's this thing right here, right? Imagine there's this person right here, and this person is throwing a ball, okay? This person is throwing a ball. And so that ball goes from here to here. And so from here, the ball is being thrown and it bounces off the ceiling and it just goes down. It's obviously not going to be exactly respecting the ceiling and the floor, but this is not the price. So basically what it means is the price is not able to break above this point because it's a very strong point. That's what this explanation is. It's a very strong, hard ceiling, right? So this is a very strong, hard resistance. Price is not able to break out of this resistance zone, right? That's why every time we go to the resistance zone, that's why every time price with a momentum goes to the resistance zone, it always ends up dropping back. So first time it ends up dropping back, second time ends up dropping back, third time it ends up dropping back, fourth time ends up dropping back completely to the support zone. And then it's to the support zone a little bit, and then kind of. So let's first analyze this part, okay? Like I said, it's the person throwing a ball. So the ball is coming with a certain velocity and speed. If you guys have studied physics, you would understand this. So whoever studied physics would actually have an easier time understanding this concept right here. And again, this is not a very hard concept. It's a fairly simple concept. If you guys watch this video and go on your own charts and apply this concept, you will understand right away. So a certain velocity, okay? So let's say this person is dropping the ball with a velocity of, hold on, let me just put this in full screen. Velocity of 20 joules, okay? Or not joules, let's just say kilometers, 20 kilometers. Joules is a chemistry term. 20 kilometers per hour, okay? Per hour, 20 kilometers per hour, okay? This person is dropping the ball for 20 kilometers per hour, right? So what this ball does is it ends up, I'm so sorry. What this ball does is it actually ends up, it actually ends up going down. So this ball is going from 20 kilometers per hour, it goes down, it touches the resistance point. So that 20 kilometers per hour over here is actually a certain amount of velocity, right? This is velocity, this is speed. So this speed is being thrown here, and then it bounced off the floor with that same speed, and then it goes up. Depending on the amount of speed there is, it bounces off and then retraces to that speed. If the speed is actually very high, which is 20 kilometers, is pretty fast for throwing a ball with such a short ceiling and floor distance, right? So he threw the ball, right? And then with 20 kilometers per hour force, velocity, it went down, bounced off of here, it went up, and then from here it bounced off. It bounced off the ceiling and then it came down, almost touched the floor. It didn't actually touch the floor because in price movements and trading, depending on the velocity of the price does not exactly drop down back, right? So you can tell that it's kind of a weaker price. Anyway, price ends up going back up to the resistance zone, and then price again ends up dropping back down. Price ends up dropping back down, price again goes up, ends up touching the resistance zone, and then ends up going down again. Ends up bouncing off of here, ends up going up, touching the resistance zone, coming down. Now, when price finally comes down here, it's coming with a certain velocity. So another person, so let's imagine this person is again over here, throwing this ball again over here, right? Now, it bounced off the floor, and then with a certain amount of speed, you can tell that the speed that it's going from up to down, it's going directly. There's no retracement here. So it's a very fast move. So you can understand this is a change of character, okay? This is called a change of character. So usually when price, I'm actually gonna make this a little bit more clear for you guys. So when price comes from a point of support, right? This is a change of character because price is going up with bullish candles, so green candles, and then price is coming down, it completely breaks below this point, this previous low, and then it goes down and makes a newer low. That's going into bearish market structure. So when it's going into bearish market structure, that means price is changing the character. When a price changes the character, you can understand that price is going to go into bearish structure for some time. Okay, so anyway, we're back here. So price bounces off of the floor, which is support, and goes back up. So this is support zone. Okay, this is the support zone. That was a terrible S. This is a support zone. So from the support zone, price ends up going back up and then comes back down. It bounces off of this zone right here, and as you can see, this zone is respecting exactly, right? This zone is right here. It's respecting from here, from here to here. So that's a key level, right? So that's a key level. So price is respecting from this point to this point, and then it bounces back down. Once it bounces back down, price makes a double bottom here, and then it ends up going up, and then it bounces off from here, down, and then so on and so forth, right? You guys understand it. Okay, let this be here actually, because it's a good way to illustrate what I'm trying to say. So now once you have understood support and resistance, we're gonna find out how to actually properly plot support and resistance on the actual charts. But for now, let's focus on the drawing that I have made with my very skillful mouse that I have here handy. Now, price is kind of again going from the support to the resistance point back to the support. Now you can understand that price is having more velocity, right? Price is having more speed at this point. At this point, price is catching speed, goes down, catches speed, goes. So from here, price ends up going back down, right? So it catches speed and goes back down. And so from here, you can understand that price from here was 20 kilometers per hour, right? 20 kilometers, I shouldn't have erased the drawing, but I did. Price from here was 20 kilometers per hour at a certain velocity. It goes down and comes back up and goes down. This is not enough for price to come back here and bounce all the way back down. There's not enough speed. So let's say from here, price is jumping to 50 kilometers per hour, 50 kilometers per hour, right? 50 kilometers per hour. So now you can understand that price has more speed, which is why it's able to catch the speed up here and then drop down. So usually what that speed that I'm referring to means is that there are aggressive sellers. There are aggressive sellers here. Aggressive sellers, right? Aggressive sellers entering the position here because they understand that price has reached the resistance point. Once price reached that resistance point, aggressive sellers sell their position because now they're selling it, so there's more speed. Here there's not enough people selling it here, which is why there's not enough speed to come back all the way down. Aggressive sellers, I'm gonna write AG, okay, aggressive sellers. Aggressive sellers are entering the sell position over here and they're entering shorts, which is why price is having all that momentum and speed and coming back down to this point of support, right? This point of support. And then from here, buyers are entering because buyers can identify that this is support. So buyers are entering this point over here and then price ends up going back up with the speed. So again, 20 kilometers, here it's 50 kilometers, and then here it is 50 kilometers, right? So 50 kilometers and 20 kilometers, what I'm saying is the aggressiveness of the buyers and sellers. So I'm trying to make it clear and understandable for you guys. That's why I'm using these terms of 50 and 20 and all these kind of different terms. I'm trying to make it easier for you guys to understand. So here you can see that 50 kilometers going up, coming down. So more aggressive sellers than over here. Here more aggressive buyers than over here, which is why price didn't go here and came back down. It's 20 kilometers, right? Here's 50. So it's a little bit more faster and more aggressive. So then here you can see another point right here. This point of inference you can identify as 80 kilometers per hour. 80 kilometers per hour. Also, don't mind the other noise in the background. My house is going through renovations right now. I'm kind of renovating my house to look a little bit better and all that. So don't mind the sounds in the background. If you guys are hearing anything, I don't know if you are, but anyway, so 80 kilometers, not 80 kilometers per hour. 80 kilometers per hour at this point right here. This point right here. This point. That's why price is going all the way up, breaking this point, breaking this previous point right here. Price is breaking that point and going all the way up and forming a new high at a new level. So you can understand that there are such aggressive buyers. Aggressive aggressive buyers at this point right here. Sorry, at this point right here, which is why price is breaking above this and going all the way up here, right? If there are no aggressive buyers here, price would not be able. So it's 80 kilometers per hour, so that means more aggressive buyers than here. It's only 50, which is why it's only going to this point. And then the sellers enter, and then it's 50 kilometers, and that's why it's coming back here. And then once it comes back here, 80 kilometers per hour, so more aggressive buyers than previously. This was 50, now it's 80, right? So more aggressive buyers, and then we enter a huge profit, and then you can take longs here. Many people did, and that's why we broke above this previous high right here, this high. And this high also you can understand both of the highs, right? You can understand the price broke above, and this is also another change of character, like I was saying before. Like just like this, how this one right here was a change of character, and this one there was a change of character. This is a change of character right here. Okay, so you can understand. I hope you guys understand what I'm saying with the 80, 50, and 20 kilometers per hour. I'm just trying to use inference points. Okay, so let's erase all of these drawings. We don't need them right now. So back with a clean chart. So again, we understood that price broke above this point right here. So this point right here. So it has a change of character. COCH, change of character. Okay. Price broke above and then made a new high, and then from this high again aggressive sellers entered because price is not going to keep going up, right? We're going to have retracements. Market structure, we're going to have retracements. So when price enters retracement, we're going to come here, make a new low, and then go back up, and then a little bit lesser, right? And so on and so forth. And then again, same as I explained before, aggressive aggressive buyers right here at this point right here, which is why we're making new highs, okay? Which is why we're making new highs. We made a new high right here. We made a new high. We have a retracement. Sellers enter because price is at an all-time high. They didn't want to risk going back up anymore. So more aggressive sellers enter. Sellers enter, and then they make price go all the way down to this previous point right here, right? And then you have more buyers enter from here, and then it goes here. This is what you call a double top. DT, double top, okay? This is what a double top means. So whenever you have double top, price always 99.99% of the time, price will reverse. When you have a double top like this, price will reverse and go back down, okay? You cannot avoid that. Price will do it. It's not up to you. So whenever you have a double top, whether it's stocks, forex, crypto, whatever you're trading, whenever you see a double top like this, price will end up going back down, okay? When you have a double bottom, I don't have a proper double bottom here. This is not a double bottom, guys. It's just a support zone, okay? Double bottom, I will show you guys if I can in the charts. But anyway, this is just the opposite, right? So double bottom would be just exactly the opposite of this. I need this here. So double bottom would be exactly the opposite. These two would be down like this, right? So it's very identifiable. It's very identical, both of these, right? And there are no other levels near this point. So these 2 points are like mountains, like Mount Everest right here. So you always, that's a peak, always get to a peak like Mount Everest. Imagine this being the Mount Everest peak. You can't go any higher. You have to come down, right? So whenever there's a double top, price will end up reversing, okay? Price will end up reversing, and it's always gonna happen. Now, we have a double top here, right? So prices will end up reversing, and you can even look up examples on Google of double tops and all that kind of good stuff. Price ended up reversing here, right? Price ended up going down. So we have a double top. It's a DT, double top. Price ended up going down and to this point right here. And what is this point? This point, and this point have a relevance, right? Price respects major key levels, people. And usually on a real chart, this point would have had a huge wick from the top, right? This point would have usually had a huge wick from the top, which is why price is respecting this point. So this would have a huge wick from the top to the bottom, and then price usually respects this point and bounces off this point to go up and make a newer high. That's usually what would have happened. So price has a major key level here. I even named it as major key level. This is the first major key level because price bounces from here to here. Price bounces from here to here, right? Price bounces from here to here, and then here again you have another almost. This is what you call the head and shoulders pattern, okay? This is what you call the head and shoulders pattern. Let me just delete all this, okay? This is what you call a head and shoulders pattern, which I'm gonna explain. This one right here, this is the left shoulder, and then this is the head right here. Head right here, and then this is the right shoulder, right? Shoulder, head, and shoulder. And now when we have a head and shoulder pattern like this, price is definitely gonna go down a lot. So you can be confident with that, okay? You have multiple confluences here, and price is definitely gonna go up. And obviously this happening on a real chart is very unlikely. I just wanted to show you guys every single possible example that I can on this. That's why I did this for you guys, right? Now you can come down, again we touch our previous support zone, which is why it's very important to not delete your previous setups. If you have good setups, you have to keep it, right? That's why I'm here to teach you guys how to make good setups in the first place, so you don't have to keep deleting it and making new ones. Then we have a third key level here, which is why price is respecting it twice, right? From this point right here, and this point right here, and this point right here. Price is respecting it a lot. So what we're gonna do here is we're gonna draw a block, right? We're gonna draw a block, and we're gonna name this as our market fluctuation, liquidity price. This is our market fluctuation here, and our market fluctuation meaning it either goes up or down. We cannot predict that. So this is a bad place to trade. When price is at this point, you don't take trades because you don't know if it's going to go up or down. But because here you have a double top, again, you have a double top again, price end up going down. Again, there's a double top right here, just like over here, double top, right? Double top here. So when we have a double top, price will end up going down just like it did. It broke below the support zone. But again, when price just breaks below support, you do not take a trade, okay? You do not take a trade. You wait for price to break below, retest, and then once it retests minimum once, maximum twice, then you can take a short position from here and look at the amount of profit you could have made. Change of character right here, and it would keep continuing to go down and down and down for a little while. Okay, so this is a basic structure of market, and I hope you guys understood this, because if you don't understand this, it's going to be very difficult to actually understand the main and the real market. So I hope you guys understood this. If you did not understand this, you have to go back and watch it again, okay? Because if you don't understand, it's going to be really hard to understand the real market. Now we're going to go up to the real markets, and this is the real chart over here, right? So I'm gonna make the time frame a little bit smaller to the 1 hour time frame, because that's how I trade, the 1 hour time frame. So now we're over here, okay? And now we can, again, spotting resistance and support zones on real charts like this is going to be obviously harder than spotting them on another, I can't find it right now because of the 1 hour time frame, but on the actual drawn by myself charts, because the real charts look like this. They look like this. So the ones I drew and the ones this is, it's completely different. It's not exactly the same. What I drew is just for you guys to understand. Go back to the candles. So on a real time frame, on a real chart like this, okay, we're gonna identify support. This is a very good example of a double bottom, as you can see over here. I said I'll show you guys, and it happened. So as you can see, this is exactly a very good example of a double bottom right here. So you have a double bottom, price ends up reversing, and look at what happened. And this is a positive order block. When you have a positive order block, which I'll make a video on ICT concepts later on, not anytime soon. So this is a positive order block, and then price ended up shooting up like insane. And then here you have some sort of a divergence right here, and then price ended up coming back down. Anyway, let's talk about that later in another video. But here, as you can see, this is a support zone and this is a resistance zone. So let's first draw our support and resistance. So this would be our resistance zone, and right here, right, this would be a resistance zone. I'm just gonna name it resistance. Okay, this would be a resistance zone, and this would be our support zone, right? Support turned resistance turned to support, which is very important to have, right? And I'm gonna make this a little bit more clear. So let me first make this support. Okay, so as you can see here, support is resistance, and then here it turns into support. Here again, it breaks below, retests, and then go down. So let me just show you guys this in a real example, okay? Let me delete this really wonderful trade. As you can see over here, price broke below the support, just like I showed before in my drawing, right? And then it retested twice. What did I say? Minimum once, maximum twice, and then look what happened. It made new lows. A change of character. This is a change of character right here. At that point, that's a change of character from right this point to here. That's a change of character, and that made a new low. So you could have made a lot of profit if you took this trade rather than just taking it over here. You could have taken the break of here over here, and then you would have lost the trade because it would have gone back up and taken you out. So that's why it's very important to wait for break, retest. Always have to wait for the retest, okay? I'm teaching you guys the real stuff, guys. Like, I mean, and then here you can see that price created a major resistance point. Something probably happened. Someone said something. Maybe Biden probably said something here, or something would have happened. Some major event would have happened, and then price ended up shooting back down, because this is not a normal thing to happen, right? And this happened about like 2 days ago. So Biden probably said something, or somewhere in Europe something would have happened, and price would have ended up fluctuating like this. And now we have Actually, I could have predicted this, but I wasn't really looking at the charts at the time. As you can see over here, price is creating constant lower lows, correct? Constant lower lows, and we have a resistance point here. So this is a very good example of when a price could potentially break out. And so we have constant lower lows, and then price ended up breaking out. I could have waited for a retest, but if I waited for a retest, I would have been too late. I could have even entered over here, and then price would have shot back down and then helped me gain profit. There was no retest here. So there are incidences like this where price does not have retests, right? So let me show you another one of my charts that I have set up. And this one I actually talked about in my previous video. And so this is actually a very good setup. So as you can see here, resistance, and price is respecting that resistance point here. Even though it kind of broke out here, it's a fake out. So price pretended like it's breaking out and going up, and then in fact it actually broke out and came back down, and which we predicted. I have another video which I will link at the end of this video, so don't miss it. Watch till the end of the video, and if you want to watch my setup on this and how I took this trade, exactly everything, the whole step-by-step process on this trade, I have already uploaded this trade on my channel. So if you guys want to watch that, you can definitely watch that. It's on my channel. I will link it at the end of this video. Anyway, so as you can see here, there's a one point over here, another point over here. This is resistance, and then this is price coming up, right? Price slowly going up, which I've marked over here. And then this is our take profit zone. The reason why it's our take profit zone is because it's the most wicks. As you can see here, 1, 2, 3, 4, 5, 6, 7 bare wicks. There are a lot of wicks here, right? Another setup is over here. Actually, this is a little bit complicated to explain at this point. This would be a pretty good setup. Let me go on the daily 4-hour time frame. So as you can see here, I have done my equal share of support, turned into resistance, turned back into support, which turned into resistance here because price was here, support, price broke below, retested, resistance, right? Price is rejecting from this point, going back down, broke above, retested, broke above again, and then it created again support, broke below, resistance, and it continued to do so, right? Continued to do so over here, and it just kind of changed character over here. So, and then I took this trade. I also have this trade documented, which is also linked to my channel. If you guys want, you can go watch it. And so again, this is our resistance point. This is our support point. Support, which turned into resistance, which turned into support again, right? And then as you can see here, this is our partial zone, where if I have a long trade, this would be my partial zone. So I would take my partials here. Why? Because major wicks, major things have happened. 2 huge liquidity candles here, and a lot of small candles here, partial zone. And then our take profit zone will be below. And so these are a few good setups of support and resistance zones. And there's also one support zone, a resistance zone, right? You can have more than one support or resistance zone, it doesn't matter. And this could be a very good resistance zone, and especially on a daily time frame, right? Because when you start analyzing, you have to analyze charts on the daily time frame, then go to the smaller time frames. This would be a good support and resistance zone right here, because as you can see, price was at all-time high over here, and then you have price touching the all-time high, and then price will definitely go back down, because again, this is the daily time frame, right? So anyway guys, this is basics of support and resistance. I hope you guys understood what I'm saying, and I hope my video made sense, because these concepts are actually very, very, very important, believe it or not. And so I hope my concepts made sense. If it did not make sense, I would highly recommend you go and watch this part of my video, because if you understand this part, even on the real charts, it might take a little bit of time, but you will end up understanding it one day or one time, right? So it happens slowly, but it will definitely happen for you guys. And so I strongly recommend you watch this part of the video, the first around 15 minutes of the video, again and again and again, until you guys grasp the concepts of resistance and major key levels and minor key levels and double tops, right? And then support and resistance zones. So I hope you guys like this video. I know it's a quite long video, but I know this is a very important video as well. So if you guys want to watch it, watch it. If not, then that's your loss. Anyway, thank you so much for watching this video. I hope you guys liked it. And definitely don't forget to like and subscribe and share my video to everyone who's aspiring in trading. And yeah, thank you guys for watching.